Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is April 8th, 2018, and this is a uranium sector review where we're going to take a look at the uranium sector from the URA ETF from various different timeframes, as well as look at various stocks that make up that sector and are in general participating in the uranium space and see and try to get a better sense of what's taking place in this particular sector. So starting with hourly chart here, we've had a good run up here from a low of around 1180 all the way to 1309. We've pulled back some here. Now we're at the 200 EMA around that 1275 area, coincides with the middle Bollinger Band. It's a good pullback and it's found support so far around that 50 RSI level. You want to see it hold. I think it will, because this is the point where the breakout above the middle Bollinger took place right around here. So I think that this is a good place if you're a short-term trader to look at finding some support here and potential rally continuation here. Now looking at the daily chart, this was a reasonable area for support because RSI at that 30 level was exactly at the level where we found a bottom last time around, right here. When we broke out, this was the point of RSI around 30 that the breakout took place. So no surprise that when we hit this level this time around that we found price support, and that's actually positive divergence that I pointed out to several folks here. And so anyway, so this particular rally so far is good. No, it's not a surprise that we've hit some resistance around the 50-day moving average here, and we've got the 200 right above it. I want to see some consolidation here, but I think ultimately we're in a good position now that we're above the 50 RSI level to consolidate here for a little while and then ultimately move higher. I think the uranium sector is in a place where we can start to rally here. Now the URA weekly, again, we had some positive divergence here where price double bottomed. RSI was kind of higher than last time around at 1159. And I think that we're in a good position, risk reward, to move higher with a stop loss right below this 1180 marker here for a nice rally. Hopefully, for those that have been very frustrated bulls from the fundamental basis, we'll finally see a breakout above that 1750 level, ultimately above the 200-week moving average and beyond. URA monthly. You know, we've been basically consolidating here for many years above that 38 level. Is this the time where we're ultimately going to break 50? That's anybody's guess. I mean, you want to see a rally very soon because the PPO are progressively moving towards zero. So you want to kind of see that curl back higher here if this is going to be a sustainable rally. But ultimately, so far, this 10 to 11 area has held. But at the same time, every time we've hit this 16 level to 18 level, we've kind of gotten hit, fallen back. So for now, this is just a trade. It's not an investment until it breaks this level or breaks this level to the downside. You do not want to be long if it breaks this level to the downside, and you definitely want to be long if it breaks this level to the upside. So keep an eye on URA ETF. Now, taking a look at some of the underlying stocks in the sector led by Cameco. These are all from weekly perspectives. This looks actually very good. Look, it broke out above the 50 RSI level, and this tells me that with the PPO now above zero, that this actually wants to move higher. This is the downtrend that's been taking place in all of 2017. We broke out of it, consolidated a while here, and now it wants to run. So I want to be long Cameco here. Denison Mines, also it's found support at this RSI support level, which is kind of the point at which we broke out from in November here at 38. So we're finding some support. This presents a pretty good risk reward. You buy here with a stop loss kind of right below that 40 level. I think the upside with PPO curling higher is nice. Taking a look at Encore Energy, this one as well, with RSI above 50, it's been consolidating for a better part of 12 months. It looks like it wants to move higher. PPO just crossed zero here, so keep an eye on this one because the moves can be very powerful. To 10 to 15 cents, it can happen in no time. Energy Fuels is another one that broke out of this downtrend here in November of 2017. It's consolidated here, been very frustrating, but it looks like it wants to break out above this $2 level and make a run for 3, possibly 5. You see that RSI is at the same level today at 188 as when price was higher at 208. So it's positive divergence. PPO is above zero. Volume is increasing every week. So this is definitely one that you want to look at. Fission uranium doesn't look as good. It's found support so far at that 38, 39 level RSI, which is this level of support that it's found in the past. You want to see it hold here, but when you look at some of the other names that have shown strength, this is not one that is showing that strength. Looking at GovEx uranium, and this is one that seems like it's finding some solid support around that 20-21 cent level on the Canadian exchange. Coincides with this RSI support level it's found multiple times here. If this holds, and I think it will, volumes increasing, PPOs curling higher, this can really make a run. I think next target, if this does actually break out above this 50-week moving average, target of 45 cents is definitely in the cards. Mega uranium, we're not going to cover this one because this is a shell for next gen. So let's follow what next gen does. Next gen has a very good fundamental story, but the technical story has kind of broken down of late here. You want to see this 170 to 180 area hold. It's very important. I think it will. It found some support here at the 30 RSI level, which kind of coincides with this trend line breakout here. If you extend it a little bit, around that 30 level is some strong support. Look at the volume. This is the strongest volume it's had in years, frankly. So in fact, possibly of all time. So if it can break above that $2 level, I think that this is going to have some tremendous upside. This might be the best fundamental story in the uranium sector. So do your due diligence on this one. So if this one rallies, Mega Uranium, which is kind of double bottoming here around that 10.5 cent level, can also really find a very strong rally point. So keep an eye on those too. A couple more here. Sky Harbor, another one, has a very good fundamental story behind it, but it's been consolidating for about 12 to 18 months, hasn't done much, and it's on this low point here. So if it can hold this 30 cent level, it can rally. It's building kind of positive divergence on RSI, slightly higher lows consistently. But if it doesn't, if it breaks below 30, then this can really dump all the way to 20 cents before some strong next support is going to be found. But ultimately, PPO is curling higher, so this can run towards 55 cents in no time. Finally, you are actually second to last is URG. Beautiful hammer pattern here off of that 58 to 59 support level that it's held many times over, around this 40 level RSI, found support many times, and now it closed the week above that 50 level on RSI. This one can really run. It's really found some powerful technical action over the last many years. Target of 90 cents in the short run is definitely possible very soon. Uranium Energy Corp, UEC, another one that has a very good management and just has a good fundamental story behind it, but it hasn't done much of late. It's found some support here, a couple of positive weeks in a row. PPO starting to curl. Keep an eye on this one as it's targeting that 50 RSI level. If it breaks higher, it can have a very strong week next week. From a long-term perspective, it needs to break $2 to make a run towards 3 and possibly beyond. But this is one that if the uranium sector actually does make a turn and breaks that 20 level on URA, this can see double digits in price. This is really attractive investment. And finally, actually a couple more here. Western Uranium, it's been building positive divergence here, and its RSI is higher today than it was when price was close to $1 here. So this is one you definitely want to watch. Something is very positive is taking place here, and volumes increasing, PPOs firmly above zero. This one might be one of the most powerful charts of the sector so far, and so if it breaks this, I would say this 80 cent level, this can really run. 220 is a reasonable price target longer term. Finally, Westwater Resources. This one has been completely in the dumps. We've been hit by it as well. We're no longer in this position, but for whatever reason, this is just technically very weak. RSI is leading price lower. So for the time being, there's nothing to suggest that this wants to move higher. However, if it does rally and can break above that 63 cent level, then it might have some explosive potential. But until then, this is dead money from a technical perspective. Guys, good luck with your trading and investing. And please check us out on patreon.com/moneyology. If you appreciate these videos, please pledge some support. Even $1 a month goes a long way towards helping us reach our $1,000 a month goal. Anyway, have a great week, and we'll see you guys soon.